She's an experienced senior banking professional with over 17 years in the banking industry and currently leads a team across Australia of trade and working capital specialists. To show us how managing risks and profitability in the changing macro environment, would you please welcome NAB's Executive Manager of Trade and Working Capital and International Woman of Mystery, Jackie Cooper, yes!
Thank you, Warwick. What an intro. And hi everyone, it's so great to be here at Australian Manufacturing Week. But what has become very obvious to me is I've definitely drawn the short straw. The last presenter on day 2 at 5 p.m. So tough gig, bear with me. And don't worry, I do realise I'm between you and a cold drink tonight. So, for those of you that don't know me, I am Jackie Cooper, not the International Woman of Mystery. But I have the privilege of leading our Trade and Working Capital team here in Australia. So what does that actually mean? We support our customers with working capital needs across a range of solutions, specialising in both domestic trade and also international trade. Now, some of these solutions are debt-based, but many others are more transactional in nature and touch on what Warwick was talking about around managing the risk of international supply chains. We actually have over 70 specialists spread across the country, and not just in capital cities. So I'm a country girl, and we definitely make sure we support our regional customers out in regional communities as well. And I'm really proud that at NAB we have more specialists and more bankers on the ground out in front of our manufacturing and business customers in regional communities. So what will I cover today? Firstly, I'll talk through the ever-changing macroeconomic environment and also how the ongoing economic uncertainty is playing out for our customers. Secondly, I'll cover the trade cycle and the trade cycle typical to a manufacturer and what that presents in terms of cash flow management and also risk mitigation. And then thirdly, I'll touch on tips to grow your business. And our top 4 tips for 2024. So, the ever-changing macro environment. I actually, I wanted to show a video here, but NAB's marketing team, God bless them, wouldn't let me. So I'm going to give it a whirl, but many of us in the room will remember Mr. Bean or Rowan Atkinson. I fondly remember sitting on the couch with Dad as an almost teenager, thinking Mr. Bean was pretty funny. But there was one great scene where he was actually on a roller coaster and he was completely unperturbed through the twists, the turns, the ups, the downs of the roller coaster ride. And trust me, everyone around him was screaming their lungs out, had white knuckles from holding on for dear life. And good old Mr. Bean manages to fall asleep on the roller coaster. And I know for many of us in this room, the past few years may have felt like we've been on a bit of a roller coaster. There's been so much going on. There's been the ups, the downs, the twists, the turns. And for me, I guess the roller coaster sums up some of the disruption that Australian businesses and manufacturers has faced, not only in the last few years, but over decades as well. You know, gone are the days of black swan events and, you know, as more recently it seems we continue to face into, you know, these disruptive environments where we've had anything from COVID and the immediate flock to Australian made. We've had the inflationary pressure on, let's face it, just about everything. And then we've obviously had shipping delays and shipping challenges across the world. Not to mention the geopolitical risk that customers and business owners are facing. So, I wanted to touch on a couple of impacts that are specific to international trade and manufacturers. And this one is really around freight prices and international shipping. So there's been a magnitude of overlapping shipping disruptions that customers have been facing of late. And many of these relate to your industrial port action that we've seen both here and overseas, the escalating attacks we've seen in the Red Sea, not to mention the war in Ukraine. So this has all played out and had a huge impact on global shipping and also the cost of that shipping. Ships are now having to reroute and travel far longer distances, which also means it's taking, not only a longer time to get goods to and from Australia, but it's actually at a higher cost. And you can see that playing out on the right-hand side graph there with a little uptick in shipping prices as well. So it's obviously increased costs. I spoke about it before, but let's face it, we've got an inflationary problem not only here in Australia but around the globe. That increased cost will have an impact on our inflation numbers as well. Moving to labour and purchase costs. So NAB's latest monthly business survey contains tentative signs that both supply and demand are coming into better balance, and this month we did see some modest easing in the pace of labour and materials growth, but both still remain elevated. In short, I guess the progress on inflation is likely to be gradual at this point. NAB's monthly business survey indicates that business conditions have remained resilient. However, forward orders have been a lot weaker. And I guess they've been below average for quite a while now. The rise in interest rates is also doing its job on curbing inflation, with consumers now starting to pull back on spending, and I dare say most people in the room are very much aware of that as well. We've also seen the normalisation of supply chains, and what I mean by that is the pandemic obviously caused a lot of disruption and saw us shift to or face into production constraints. Demand for goods obviously spiked during that period, and we're now seeing that start to fall off a bit as customers move back to higher demand for services. So we're definitely seeing stock levels of our customers start to decrease as these two things play out. So as we've got a decline in demand from the consumer base and also the need to move some of that stock. I'll also add that probably the most important thing to touch on when we talk about labour is not just its cost, but I think the accessibility and access to labour at the moment. So no different to you guys, we are also struggling to find people at the banks. So definitely understand how hard that can be to find people. And I think the reality for a country such as Australia is, and the probably biggest challenge we're facing over the next decade, is the changing demographic of our labour force. And when you put that into practice, what we're seeing is, I actually had the privilege of hearing from Simon Kushumasha yesterday morning, who's a seasoned demographer. And he spoke about the baby boomers who are actually moving out of employment and into retirement. And then the millennials, and the baby boomers, obviously quite a large cohort of the population. But then we've got the millennials entering the workforce, but at a much lower number. So that's already a problem from an employment perspective. But Simon also spoke about the difference between these two categories of workers we have here in Australia. We've got the baby boomers who were born to work. And then we have the millennials who are searching for more purpose in life and more purpose from the work that they do. So that adds another complexity and another dimension into that challenge we've got from a labour and employment perspective. So I guess given the cost and the limited accessibility to labour, we're definitely seeing, and I'm not surprised, we're seeing customers continue to invest in automation, in technology that can really help them and enhance their productivity. So, some predictions. Blank screen. Have we got any economists in the room today? No economists? Great. So I thought I might start with a fun fact. I did hear once, you ask 5 economists, you get 5 different answers. Unless, of course, one went to Harvard and you get 6. So, here are NAB's house predictions on interest rates. The first rate cut is forecast for November, Now, the cash rate remains at 4.35% with little chance of hikes, according to our economists. That said, we're most likely going to have to wait till November, as I said, before we see that first rate cut from the RBA. Now, if inflation does continue to decline, the cash rate will likely fall back to around 3% by the end of 2025. Inflation does remain above target, so recent figures indicate that inflation will continue to make gradual progress towards the RBA's target band, returning to just over 3% by the end of the year. However, our group chief economist has pointed out, a little asterisk maybe, that there are still plenty of risks out there that might throw this off course. So enough reason for the Reserve Bank to still remain cautious when it comes to cutting rates. And last but certainly not least, business conditions have taken a turn for the better. Last month, business conditions were up 3 points to plus 10 index points, a little above the long-run average. Now, it has helped that there was a rate of increase in both trading conditions and profitability for the quarter, both gaining 4 points in our NAB survey. Nevertheless, I think it's important to point out that business confidence still remains low, as do forward orders, which I touched on previously, particularly into retail, where the market is definitely starting to pull back as consumers are hit by interest rate increases. So I guess my message here, and to sum this up, is it is tough out there, but we do know how resilient our manufacturing and business customers are across this country, and there's still lots to be optimistic about being here in Australia. So I was actually in a presentation with Alan, our Group Chief Economist, earlier today, and he spoke about the challenges that are playing out across the globe. I can tell you I'd much prefer to be here in Australia, where the return to growth is likely to happen in the medium term, versus some of our counterparts through Europe, especially Germany, and to a lesser extent the UK. So I think a little bit of short-term pain still to come, but then we should be in more steady waters. So now the fun part, the trade cycle or the cash conversion cycle, which is just a fancy way of saying the amount of time that it takes business owners to obviously convert an investment in cash or stock, in stock into cash. So before I get to the trade cycle, I wanted to actually touch on trade finance, which is one of the tools our customers do use. It's basically a short-term funding facility to enable you to bridge the gap between when you get paid and when you between when you have to make payments and when you receive those payments from your customers. Trade finance is, I guess the important thing to point out here is at NAB we really do understand that no two businesses are the same, and there's no one size fits all when recommending a working capital strategy for a customer. Our products, particularly trade finance, are very much tailored to the individual business, and they can be drawn in any currency, as you can see there, or any of the major currencies for that matter, which really enables you to, if you are receiving payments in a foreign currency, you can take advantage of a natural hedge in that position. There's also the ability to take advantage of early payment discounts from suppliers and being able to negotiate them, and I'll touch on an example on that shortly. But I wanted to run through what a typical trade cycle looks like. You guys that run businesses will know that this is very much what it looks like when you, the manufacturer, there in the middle, are looking to make or produce goods. So we start out here on day one, and we're you're obviously ordering goods from your supplier, at which point, let's just say in this example, it takes 30 days for the supplier to ship those goods, and you've then entered into agreement with your supplier on an agreed terms. Now, some of those payment terms might be 30% deposit, might be 50% deposit, or God forbid, you might be required to pay 100% deposit either at that point when the supplier ships, or some might even demand payment from order. So 30 days later, let's just say the goods are received into your warehouse, and that's when you do the value add, the transformation of those goods into the finished product that your customer has requested. This process, again, clearly 30 days as a number of choice at NAB. We're assuming that it takes 30 days for you to get those ready and ship them off to your end customer. And at which point you would then issue a sales invoice for payment at a later date. Now, in this example, we're assuming payment doesn't come in until a further 60 days down the track, at which point the buyer pays the invoice. And if you have taken up a trade finance facility, for example, the gap in funding is from when you first had to pay the deposit here on day 30 through to day 150, meaning there's a working capital shortfall of 120 days. So that's all good and well, but I thought I would also touch on, before I get to the example on supplier discounts, I wanted to touch on the risks that play out in this trade cycle, and specifically when dealing with international parties. So if you're dealing with counterparts in Australia, we're bound by the same rules and regulations. It makes it a lot simpler. When you start dealing with international parties, whether that be a supplier overseas or a buyer of your goods, if you are exporting goods, it does make it a little bit more complicated because obviously we operate in different legal jurisdictions and the like. So there's probably two main risks to call out. The first one is when the supplier is asked to ship goods in advance of payment or manufacture goods to a really specific spec that everyone knows would make those goods unsaleable to another party. In the event that the buyer breaks their contract or no longer wants those goods or is financially incapable of making that payment, the supplier is essentially lost out and they're out of pocket for the costs that those goods took to make, and not a great outcome for the supplier. By the same token, there's also the risk for you if your supplier is asking for payment in advance of shipment, so right here down at day one, when you place the order, or even at shipment, and they're trying to protect themselves against non-payment from yourself. But now you're faced with the risk that the supplier will not ship the goods as requested in the time frame requested, or may not be able to ship the goods because of their own financial situation. So this could leave you both without, I guess, your cash that you've outlaid and even your goods that you're hoping to on-sell at a margin to your customer. So in either instance, as I spoke about before, the only real avenue to settle these grievances is to toddle off to the international market. Someone takes someone to court. It's a lengthy and very costly process. And you have a chance of recovering costs. You may not recover your costs as well, though. So fortunately, I guess NAB, with its relationships with international banks across the world, we can support you in managing some of these risks. And this is where products like letters of credit or documentary collections come into play. And letters of credit are really just financial instruments that allow payment to be made to the exporter once they've provided those documents to the bank. And documentary collections are a process where banks act as intermediaries between the importer and the exporter to facilitate and sometimes even guarantee that that payment will be made as terms and conditions are met under those processes. So these types of facilities really are there to protect that supplier non-payment and buyer risk that exists through the trade cycle. So, if that does interest you, please come and chat to me after this, and we can go into further detail if you like. Unlocking early payment discounts. So I spoke about this briefly, but in this scenario you can see that obviously without trade finance we were paying 30% of the full invoice value and then paying the remaining 70% when those goods enter the warehouse and processing. Now, you can actually engage your supplier and negotiate terms to pay upfront. So paying 100% upfront Obviously has a cash flow drain, but the trade finance facility is there to support that, which may increase your buying power and your ability to actually negotiate an early payment discount with that supplier. So some of our customers have actually used this structure to negotiate discounts that well and truly cover the cost of the facility as well. So another good option to explore and have that conversation with your supplier. Okay. How are we feeling? I feel like I'm on the home stretch here. So our top tips to grow your business in 2024. Firstly, be prepared for anything and invest in your people. If the last few years have taught us anything, it is definitely that disruption and uncertainty is going to play out for years to come across our global economy. I'm yet to come across anyone as cool, calm and sleepy as Mr. Bean, but on his roller coaster. But really, my message here is it's about how you face into these challenges, how you mitigate your risk, and what risk management strategies you've got in place to anticipate and mitigate those global challenges or disruptions in your local supply chain as well, for that matter, not just your international one. You can regularly review and adjust your supply chain strategy and adapt to market trends and shifts. And you can also cultivate strong relationships with your suppliers and update technology in order to increase productivity across your supply chain. Most importantly, with labour in such short supply, I mentioned this before, but it's so important to focus on building really strong connections with your people. Help them uplift their skills. Build a strong career path within your company if you can. And the more you can do to promote that, the more likely they are to be loyal and to stick around. Number 2, look at levers to grow your revenue line. That might be boosting your marketing strategy, it might be entering new markets or finding new products to sell. It could even be something as simple as revising your pricing strategy to ensure that you remain competitive, but you're really enhancing that customer perception and encouraging loyalty across your customer base. Create a strong balance sheet that can be used as a buffer in more challenging times or when you inevitably face those disruptions and challenges we spoke of. Number 3, manage your expenses. Now, this one's harder said than done. My husband would even attest to that. I keep telling him it's a tough one, but yes, I get it. Inflation, the mortgage. Many business owners really do love looking at the top line and that revenue line. I know I grew up in a small business and my parents often focused on revenue and it was often spoke about at the kitchen table. But remain focused on the bottom line too. That's going to build that buffer I spoke about for the hard times that might come. Go through your expenses with a fine-tooth comb. Find ways or look for ways that you could implement productivity gains into your business. Is there technology out there that you can implement now that has a short payoff period? So it might be, an expense that increases this year and the year after, but for years to come, that will actually pay off and give you more profits and increase your bottom line. And then last but definitely not least, and I think this is a really important one, I was actually chatting with some of the guys from William Buck, who I know have a stand here, yesterday morning. But definitely find the right business partners to support your business, who provide insights and advice. Make sure you have the right accountant, one who can help you take advantage of tax offsets, R&D incentives, and last but not least, I'm obviously going to say it, find a good bank, find a good banker, one that can really provide specialist insights, advice on working capital and how they can support your growth and aspirations both now and into the future. I think that's really important. Thank you so much for your time. Graveyard shift is officially done, but I am sticking around and I'll put my details up there If you want to connect on LinkedIn, reach out. My number's there as well, but I'd be happy to have a chat if anyone's interested. So back to you, Warwick.
Jackie, thank you so much.
Thank you.